So in our last masterclass, we learned about 3 technical indicators that actually work: moving averages, MACD and CPR. So in today's class, the process is very similar. We are going to learn about the next 3 technical indicators which I've personally seen working a lot: Supertrend, VWAP and Fibonacci Retracement tool. So hi all, welcome to the 31st episode of the complete learning series of stock market investing and trading. As always, I've put all these videos into a playlist. The playlist is available here at the I button. Make sure you watch all the videos in the right order and learn really well. Let's all trade together and grow together. So the agenda of today's class is very simple. We are going to learn everything that is there about Supertrend, VWAP and Fibonacci Retracement tool. So by learning this, I'll also be teaching you how to practically use them for intraday trading purpose so that you can learn it and we can all start making profits. So that is that. Without further ado, let's get right into the video. The name is Sharik Shamsuddin. Welcome to Market Feed. So whenever we learn about technical indicators, there are some disclaimers to be given. And the fact is that in the last class, where we learned about the first 3 technical indicators, I've taken a lot of time and given the disclaimers properly. Why technical indicators? Comparing technical indicators to price action trading and all of those. So please make sure that you watch that video and then come to this. And if that is the case, if you marked your attendance in the comment section, let's start learning, right? Welcome to Technical Indicators Masterclass Part 2. So moving ahead into the first slide, we can see that we're going to learn about the first indicator among the 3 indicators that we are going to learn about, and that is Supertrend. So the first slide in that is what is Supertrend. So let's very easily understand what Supertrend, the technical indicator, is, right? So now let's think about it, right? What is the literal name? Supertrend. So what would it be indicating? Trend only, right? So if you read the first pointer here, you can easily understand that Supertrend is a symbol line which is used to indicate trend. It can act as support or resistance also. Now, just by understanding so much, now we can practically feel that this can be put to use when it comes to trading, right? If it is a line on the chart and if it can indicate trend and if it can act as support or resistance also, amazing, right? We could actually take trades using that. And that's something which I'll practically show you. Now moving ahead, let's read the second and the third point also. The second point says the line changes its color between green and red based on the price movement in the underlying. When we go to the chart, you'll actually see this. But let me tell this to you. If the underlying price is below the Supertrend line, then the Supertrend line will be red in color. If the underlying price or the stock's price is above the Supertrend line, then the Supertrend line will be green in color. We'll go to chart and see it, no worries. The third point says that it does not predict any direction but tells you to initiate position or give confidence to stay in it till the trend sustains. It's very similar to many other technical indicators that we have already learned. Again, when we go into the chart, you'll practically understand what I'm talking about. Now, we are coming into the next slide, which is intraday application. For that, I'm going into chart. So I've come to my broker, which is Fires, and I've opened charts here. Now, let us apply Supertrend as an indicator on top of the chart here, right? So yeah, I've opened the chart of Nifty Bank here, and the candles I'm looking into is 5-minute candles. Okay, of Bank Nifty. So how do you add a technical indicator? You come here, click on this FX, and Supertrend is what we need, right? So I'm adding Supertrend onto the chart. Ta-da! It is there on the chart, right? So you can see Supertrend now. Now again, I'm just coming back into our presentation, and as you can see here, the most common setting used by traders is 10 and 3. 10,3, right? So I'm coming here, I'm clicking on settings and I'm coming here to input. So you have to set 10 and 3 here. So in your broker, if you're setting it for the very first time, if it is a different setting, make sure that you recalibrate it to 10 and 3. Cool, it has come here. I'm just marking the day's beginning or day's starting here. So as you can see here, from this point, Bank Nifty's price is staying above the super trend line, and for that reason you can see that the super trend line is green in color. At this point you can see that Bank Nifty's price actually crossed the super trend line and started moving down. Now here you can see that Bank Nifty's price is staying below the super trend line here, and for that reason the super trend line is red in color. So as you can see, as Bank Nifty keeps on moving, the super trend line is created then and there. And now if Bank Nifty would move up from here, as you can see the market is open and Bank Nifty is actually moving, right? So if Bank Nifty keeps on moving up, this line can act as a resistance. That is what we learned in the first slide, right? It can act as a resistance, and if that resistance is actually broken, then there is a chance that there could be a trend on the upper side. We could see this here, right? See, Bank Nifty was above the super trend, then it came down, super trend was broken, and see what a good fall happened after that. I hope you're understanding this. But let us actually go back into the presentation where we can actually understand the intraday application of Supertrend as a technical indicator. Point number 1 is buy when underlying price crosses the indicator line from below and goes green. That is, if this is the Supertrend line, if the price is moving up from the bottom, crosses it and is moving up, then you can kind of consider buying that instrument, buying that stock which crossed the Supertrend line. Just like that, sell when underlying price crosses the indicator line from above and goes red. Super trend line, underlying stock, it is moving down, down, down. It is breaking super trend as an indicator and it is moving down. It is an indication that this underlying stock or the index is kind of getting into bearish territory. You can quickly get into a bearish trade. And finally, it can also be used as support and resistances for planning stop loss of your trade. Right, see, if you have gone long, and where do you keep your stop loss when you have gone long? At a lower level, right? Where can you keep that? Below the super trend line. Because if the stock is coming down, you don't want your stop loss to be hit quickly, right? So you can keep it below a support, and as we just learned, super trend line can act as a support. And the final point here is try to go with the trend and take trades along with super trend. Now let us quickly go back into the chart and kind of understand what we learned right now, right? So what is the point? Super trend line can act as a support when the price is moving down from above to it, right? So it could have acted as a support, but then it was quickly broken. And when it is broken, there is a chance that there could be bearishness, and it did happen, right? And then when the price moved up, you can see this line is kind of acting as a resistance. Then there is a false breakout here, but again it came down. So I would say that is the super trend line acting as a resistance here is what I would say. And as I keep on saying, right, do not just rely on one single technical indicator. Club multiple technical indicators, and that is when you'll get the best of the best signals. Now anyways, the price came down again. Now it is moving up, and you can see that it is again acting as a resistance. Let us see if there could be a really good breakout from here, or the resistance actually being taken and price moving down from there. We could go to another day, see what happened here. See, the price staying below the super trend line itself is an indication that the underlying or the stock is bearish. And you can see that yesterday, this is yesterday, right? The day started here. See, the day started here. It was throughout the day below the super trend line only. It could never break the super trend line. So as you can see here, yesterday you could have been bearish throughout the day and you would have been right. Let's look into another day. So this is where this day started, right? So here till here is the previous day, which is day before yesterday. Here also, if you see from this point, price started moving up. It took super trend as a resistance here, and finally super trend was broken here. Let me zoom in a bit. See, super trend was broken here. Then the price is above the super trend line, and price being above the super trend line is a bullish indication. What happened after that? The price just kept moving up and up and up. In fact, in between it came down and it took support at the super trend, and then it went up again. Very clear? Now let me quickly go back into the presentation. This is right. Super trend is a symbol line used to indicate trend. See, it indicated trend. If the price is above the super trend line, you can kind of assume that the underlying is bullish. If the price is below the super trend line, you can kind of say that the underlying is bearish. So it definitely indicates trend. And number two, it can act as a support and resistance also. Very clear. You also know how to practically use it. If that is the case, let's move ahead and start learning about the second technical indicator in today's class, which is VWAP. And the full form of VWAP, as you can see here, is volume weighted average price. Now this is a very simple indicator. If you watched the previous class, if you already understand how moving averages work, you can easily understand what VWAP is. But again, I've personally seen a lot of traders using VWAP. A lot of traders actually trusting VWAP a lot. So let's quickly learn about VWAP. Now again, if you look about VWAP, this line repeats, which was there for Supertrend also, which is VWAP is a symbol line used to indicate trend. It can act as support and resistance. So the practical application of VWAP is also very similar to the practical application of Supertrend. When we go into the chart and when I'll actually show you how to practically use this, you'll easily understand what I'm talking about. So let us actually jump into the second point here, which is VWAP or volume weighted average price works on the principle of averaging the traded price with respect to volume traded. Now again, this might seem a bit complicated, but I'll make it very easy for you, which is VWAP is very similar to moving averages, but with weightage to volume. So if you plot VWAP on the chart, that will be a very simple line, just like a moving average. But this line is not just the average of the previous prices, but average of the previous prices plus some weightage also given to the volume. Say at a certain price, there was very high volume, and say at a different price, there was very less volume. Now when you take the average of this, more weightage will be given to the price where the volume was high. As simple as that. So the whole point here is VWAP is very similar to moving averages, but an extra consideration is given to the weightage based on volume. As simple as that. And now the next point here is it is a lagging overlay indicator which works only intraday. Yeah, this is a pure intraday indicator. Now, if you have got some basic understanding about the theory of VWAP, then let's quickly go into the chart where you'll absolutely understand everything about VWAP. Trust me on that. So I'm coming back into my broker's terminal again. I'm looking into charts. So we already have Bank Nifty open here. Now let us go into FX here and search for VWAP. Okay, I'm searching for VWAP. I've added VWAP and VWAP has been added here. But if you look into the chart, you cannot see anything on the chart, right? Why? Why do you think nothing is there on the chart? It is a very tricky question. Take it as a quiz. Maybe pause the video, think about it and comment it down. Got it? Got it? What is VWAP? VWAP is volume weighted average price. It is the average of prices also by giving weightage to what? Volume. What are we seeing here? It is Bank Nifty. It is an index. Is index traded? No. So does index has volume? No. So since there is no volume here, right? So even if you add volume, right? So if you add volume onto an indexes chart, which is Bank Nifty, see, nothing is here because it is an index. So for VWAP to work, there should be volume. So maybe if you're trading on Nifty or Bank Nifty, if you want to see VWAP, you have to go to Bank Nifty or Nifty's futures chart. That's what I'm doing. Bank Nifty futures chart is what I've opened here. Now again, if you're beginners, if you do not understand what futures are, what options are, do not worry, wait a bit. In the stock market A to Z series that we are doing here, we'll also be learning about futures and options also, right? Cool, no worries. Anyways, coming back here, now I've opened Bank Nifty futures chart and tada! We have a new blue line here, which is the VWAP line. And again, I'm just coming here. I always love doing this, right? I love marking the beginning of a day, right? This blue line marks the beginning of the day. And from here, today morning, Bank Nifty started, moved up, then it came down and then it moved up, right? So now, on top of the super trend, which is this green and the red thing, this blue line that you see here is the VWAP line. And what is said here? It is a symbol line used to indicate trend and it can act as support or resistance also, right? Now again, you understood how to practically bring it here. Very clear. Now again, let me go back into the presentation and move into the next slide, super important, which is the intraday application of VWAP. Now let's quickly read this. It's very similar to how you practically apply Supertrend also, right? First one is load VWAP on a 5-minute chart. You can all do that. Point number 1, which is very important here, is buy when the underlying price crosses the VWAP line from below. VWAP line, underlying price, it is moving up. The VWAP line can act as a resistance. And if this is being broken, then you can probably consider buying it by keeping an SL below the VWAP line. Second point, which is super important, again, just the opposite of this, sell. Again, I'll just show this here, right? Sell. Say this is the VWAP line. And the price is moving down, 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 down. This is the VWAP line. There is a high chance that this could act as a support. But if this is being broken, you can consider selling the underlying stock or the index by keeping SL just above the VWAP line, right? The next point here is it is also used as support and resistance for planning stop loss of your trade, already discussed. And the final point is find stocks which are consolidating around VWAP and try to catch breakouts or breakdowns. You can actually do that. You can go into multiple charts, see the stocks which are consolidating around the VWAP line. Anything can happen from there. Either a big breakout or a big breakdown. Catch it is what I'd say. Now again, let's quickly go back into the chart and see if the VWAP line was respected today in Bank Nifty. Just a simple example, right? So in the morning, you can see Bank Nifty moved up and then it is coming down. And here it is breaking the VWAP on the lower direction. See, it broke VWAP and see the last down move we got there. So you could have sold Bank Nifty here or after waiting for a close here. This candle closed below the VWAP here only, right? You could have waited for this confirmation, or you could have even waited a bit more and see here on this candle, you are getting a super trend indication also that the price is going below super trend also. So there you are getting a clubbed indication from two indicators. At least here you could have shorted Bank Nifty. You could have got this much move in Bank Nifty, right? And see what happened to the VWAP line after that. Bank Nifty started moving up and beautiful here, right? Bank Nifty started moving up. It moved up till here. It took resistance at VWAP and came down. It moved up again, took resistance at VWAP and came down. It moved up again, took resistance at VWAP, but then it was broken. There is a breakout from the VWAP happening here. But what happened? It turned out to be a false breakout. Then it came down again. Then it is trying to move up again, took resistance at VWAP, and then it came down. Now, after taking resistance again, Bank Nifty is trying to break out from VWAP and also break out from Supertrend once again. Let's see what's actually happening, right? There is a chance that this could be a breakout. Now, again, actual practical application here, right? Now, since I am a trader and I keep on saying this, right? I use certain technical indicators, but I usually rely on price action also. So given that, what I would actually do is I would actually draw a line here, which I think is a very important level, and I would wait for Bank Nifty to cross this line. Only then I'll actually buy Bank Nifty, even though VWAP and Supertrend has been crossed. Now you tell me why this line is important. This line is actually marking the previous high, and the previous high is a very important level, I'd say. And also, if you come into the morning, the first candle was this green candle, then Bank Nifty came down, support was taken at this level, and then Bank Nifty moved up. So I strongly believe that this level is super important. Now, Bank Nifty has crossed VWAP, Supertrend is indicating bullishness, and if this level is also broken, then I'll probably think about going long on Bank Nifty. Very clear, super clear, practical, live application right in front of you. Cool? Then I hope you have clearly understood what VWAP is. If that is the case, let's move ahead into learning the third technical indicator in today's class, which is Fibonacci retracement. A beautiful, natural wonder, I'd say. Cool? Let's start learning about it. But again, I strongly feel like moving behind and seeing what's happening with Bank Nifty here also, right? Will it break out from here, or will a resistance be taken here? So while we wait to see what will actually happen in Bank Nifty, let us move back and learn about Fibonacci retracement. Now, this is a very interesting and very intriguing tool, a technical indicator. So when we discuss about this, even you will start thinking, hey, how is this even possible? What sorcery is this? Is something that might come to your mind. But anyways, let's learn, right? So I hope you have heard about Fibonacci sequence. This is a very famous, very popular sequence of math numbers, right? It is called Fibonacci sequence. What is it? 1, 1, 2, 3, 5, 8. So how is the sequence made? Basically, you add one number plus the previous number, you get the next number. So 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, 8 plus 5 is 13, 13 plus 8 is 21. I hope you get the point. Cool. So this is what Fibonacci sequence is. Now, if you carefully observe the Fibonacci sequence, there is a magic hidden in it. What is it? That is, if you divide any number by its next number, you'll get 0.618. Any number by its next number. For example, if you divide 5 by 8, you'll get 0.618. Say you divide 55 by 89, you'll get 0.618. You divide 21 by 34, you'll get again 0.618. Just like that, if you divide any number by its skip number, you'll get 0.38. That is, if you divide 5 by 13, you'll get 0.38. If you divide 21 by 55, you'll get 0.38. So that magical consistency is maintained throughout the Fibonacci sequence. Beautiful. Now there is another thing which is called the golden ratio. That is, if you divide 1 by this 0.618, you get 1.618. And this ratio, the golden ratio 1.618, this occurs naturally all around us, including the stock market. And this is called divine proportion. Now, I'll give you some mind-blowing examples. For example, you take the measurement of your hand and then you measure the length from your elbow to wrist, and also from this part of your wrist to the tip of your hand or the wrist. You get 2 lengths. You try dividing that. The number will be 1.618 golden ratio. And I know this is very interesting, but this does not just end into your hand. It can be extended to your entire body proportion. It exists in flowers. It exists in the universe dimension. It exists in, say, bee colonies. It exists everywhere is what science is telling. And that is why it is also called divine proportion. Now, I would say this is beauty of mathematics, beauty of science, even beauty of creation, but it is very intriguing, very interesting that this ratio exists everywhere. And going by that everywhere, when people started testing out this in the market, this is existing in the stock market also. If you look into the charts of stocks, charts of indices, you can see that Fibonacci based levels are respected in stock market also. And that is what is the last line is telling here, which is it is believed that the Fibonacci ratios, that is 61.8%, 38.2% and 23.6% works well on stock charts also. Now what is the 61.8%? Basically that is multiplying 0.618 into 100. I hope you get the point. Now, if you have understood so much, the largest takeaway from this slide should be ratios or levels or percentages like 61.8%, 38.2%, 23.6%. These have come from Fibonacci sequence, and these work everywhere in the universe, and these are working on stock charts also. Just understand so much. If you are understanding so much, let's go into the next slide where we are going to learn about how does Fibonacci retracement actually work. Now, in order to understand this, I want you to recollect what we learned about trends. Say there is an uptrend. How does an uptrend happen? There will be a higher high, then there will be a higher low, then there will be another higher high, then there will be another higher low. So price move like this, and the small moves which are happening towards the down direction in between are called what? Retracements. Correct. So whenever there is an uptrend, there will be short retracements in between. Correct. And whenever there is a downtrend, there will be short retracements in between them also. Correct. A characteristic of a downtrend is what? Lower lows and lower highs. Lower lows and lower highs. Very correct. So whenever the market is trending on any direction, there will be retracements. So wouldn't it be amazing if you can understand where the retracement will end? If you understand where a retracement will end, you can buy there and then you'll get a really good rally. I hope you're getting the point, right? Say there is an uptrend. There is a first up move, then there is a retracement, then there is another up move, and then there is a retracement. What if you can know where will the retracement end and where will the next leg of rally start? What if you know that point? You can buy it there, you can make good money, and that's exactly what Fibonacci retracement will help you do. So the assumption here is that when there is an up move, the retracement will be till a Fibonacci based level. From that level, that Fibonacci level will act as a support, and then the price will start moving up again. And where will it move up till the next Fibonacci level? From there will be another retracement, and the retracements will stop somewhere. Where? At another Fibonacci retracement level. I know this is all theory, but I'll go into the charts and we'll understand this practically. Anyways, let's read the points written here. Point number 1 is retracement is a short-term price correction during an overall trend. Understood. And it helps you enter stocks at better price. Understood. The next point here is by plotting Fibonacci levels, you can identify what support or resistance levels the prices of a security will move to. Understood, right? That's exactly what we discussed. And final point here is works with general belief of market participants like any other indicator. Now, before moving ahead into practical application and seeing and learning how to actually use Fibonacci retracement in order to find good trading opportunities, let us also read about the trading practical application, right? First point is select the Fibonacci retracement tool. There is a cache there. I'll teach you that. Second point here is identify immediate high and low and market. Cool. That is what you have to do. So let us go into the charts and start learning that. So now coming back here, we were waiting for to see if Bank Nifty would either break out from there or would actually take this level as a resistance and come down, and see what happened. This level was taken as a resistance. I wouldn't have gone long there. See, now this is what I keep on saying, right? I'm clubbing technical indicators along with price action knowledge, and thereby I'm able to take amazing trades. Cool. Now again, in order to show you how Fibonacci retracement works, I'll better go into daily candles. Okay, I'm going into daily candles, and if you remember, this is Bank Nifty futures. I'm going into Bank Nifty, the index itself. So yeah, I'll remove all these lines here. Yeah, which we drew earlier. I'm removing all those lines, and I'm even removing Supertrend from here. We have the naked daily candle chart of Bank Nifty here. What I'll actually do is I'll actually move behind the chart a bit. I'll go into the COVID times, if you remember. So this is the COVID crash, if you remember. Now I'm going to plot, or I'm going to use Fibonacci retracement tool. Then I'm going to show you some magic. Okay, so where do you find the Fibonacci retracement tool? Normally, any technical indicator you come and search here, right? Fibonacci, but you don't find anything here. That is because Fibonacci retracement as a tool, you don't find it here. Among other technical indicators, what you have to do is you have to come to this drawing tools. Click on here, and here you can see Fibonacci retracement. Cool. So this is where you have to come. You have to come to the drawing tools. You have to find Fibonacci retracement. Fine, I've selected it. Now what will I do? So that's the second point here, right? Identify immediate high and low and mark them. So you have to draw the Fibonacci retracement. So you have to draw from a high to a low, right? So I clicked on the high first, then I'm moving it down to the low, and I'm even extending it to recent times, which is today's level, in order to understand what is happening here, right? So I'm kind of marking this like this. Fine. I started it from the high. I'm taking it to the low. Cool. What can you see here? See, you can draw this at this moment. On this day when Bank Nifty took a support here and it started moving up, you could have drawn this Fibonacci retracement tool by clicking here first and by marking this also, right? Now, why is this relevant, or how is this relevant? When Bank Nifty is moving up, all these levels you see here, right? See the 0.236% level, 0.382% level, 0.5% level, and this is the beautiful 0.618% level. So all of these levels, these lines that you see here are Fibonacci based lines, and you can say that when Bank Nifty moves up, all these lines would be respected as a resistance or as a support based on where Bank Nifty is approaching it from. And what can we see here? Beautifully, these lines are respected, right? Say, for example, Bank Nifty started moving up. Where did it take the first resistance? It took the first resistance at somewhere around here, which is a Fibonacci level. It broke it, then moved up again. Then we could say beautiful resistance being taken at around this level again. Then it was broken out. Then this Fibonacci level acting as a resistance. Then that acting as a resistance again. Then that was broken out. And then it was a beautiful breakout. And then Bank Nifty actually broke out this line also. Then it came down. And see beautifully this Fibonacci level acting as a support. Then moving up. This Fibonacci level acting as a resistance, then coming down again. That Fibonacci level, which is a resistance, being broken out with strength is what we could see. And then we can see that for a very long period, this Fibonacci level acting as a support here, as a support here. Then whenever Bank Nifty is trying to move up, around this Fibonacci level is acting as a resistance. And now if you see, one Fibonacci level, this important level is being broken, or some consolidation we can see here. And after this consolidation, either there could be a last down move or there could be a breakout from here. I hope you get the point. So based on whatever you saw so far, what do you understand as the relevance of Fibonacci retracement tool? You can find a high and a low. It need not be in daily candle. It can even be in an hourly candle or a 15-minute candle. You can identify a high and a low, and then you can connect them using the Fibonacci retracement tool. You can get support and resistance levels for the future based on Fibonacci levels. And that is the relevance. Now, I really don't want you to leave you just there. I even want you to show intraday trading application of Fibonacci retracement tool. And that's why I've come to Bank Nifty again. This is 15-minute candles. Okay, you can use it in 5-minute candles also, no problems at all. So I've come to 15-minute candles so that there are less number of candles, so that we can see more number of days in the given screen space that we have, right? So here I'm coming and selecting Fibonacci retracement tool again. I'm coming here. I'm selecting Fibonacci retracement tool. So this is the recent high that Bank Nifty has created. So I'm just clicking here and then I'm dragging to the recent low. So this is the recent low, correct? So I'm just dragging it till here. So what can we see here? So if Bank Nifty is moving up, so this could be a breakout from here, and where do we have the next resistance? That is a bit above. But if Bank Nifty is deciding to move down from here, we can watch out this line as the first support. If Bank Nifty is moving down further, we can watch this line as the next support. If Bank Nifty is moving down, we can watch this line as support. So now after drawing Fibonacci retracement tool, if there is a down move, I know till where the next retracement can be. If this level is being respected, and then if Bank Nifty is moving up again, then I could go long on Bank Nifty. If this level is being broken and if Bank Nifty is moving down, then I can understand that Bank Nifty is actually moving down. I could probably go short on Bank Nifty by keeping this level as a target and by keeping SL slightly above this level. I hope you are understanding the point. Now, I would actually go a bit more further. I'll actually delete this Fibonacci levels that we have drawn. I'll come back a bit. I'll go into the history and show you what's important, right? Here you can see that Bank Nifty actually moved down so much. And forget that all of this has happened. You only know this fall has happened. So I'm going there. I'm again selecting Fibonacci retracement. I'm drawing from this high to this low. Okay, I'll just draw like it. Cool. So after seeing this, from this day, I'm seeing that Bank Nifty is moving up. So when I see Bank Nifty is moving up, I have this important Fibonacci levels as resistances and supports. And you see what has happened here. This was taken as a resistance here and it came down. This level was taken as a resistance. Then it moved up. This was again taken as a resistance. It was finally broken out. And you see here the beauty here, right? This line acted as a beautiful resistance for multiple days, and this Fibonacci level acted as a support also for multiple days. I hope you get the point here, right? So now I'm moving back into the presentation. Again, select the Fibonacci retracement tool, identify immediate high and low and mark it and extrapolate it into the coming days so that for the coming days, you already understand what are important support and resistance levels. So to play it safe, wait for trending stocks to retrace back to Fibonacci levels. You can always do that. And finally, it can also be used for SL and target setting. So that is that in today's class. So it's just like in last class, we learned about another 3 very important, super clear and very effective 3 technical indicators, right? So before signing off, I'll just refresh this again. Things to keep in mind. Number 1, there are no perfect indicators. Number 2, do not overuse and fill your chart with indicators. Number 3, different indicators might work well for different stocks and indices and might not work for others. Keep that in mind. And number 4, indicators will not give you an all truth of the market. Look at classic price action also. We just saw that. I just demonstrated that during the class, right? Because VWAP and Supertrend kind of indicated that, okay, maybe the price is actually moving up, a resistance is being broken, maybe there could be an uptrend. But we actually use some classic price action methods also. And because we did that, we did not actually go long there. And we were saved. Right. So that's the whole point, right? Now you know a lot of things regarding price action. You also know a lot of things using technical indicators. I really want you to use all of them together and then become amazing traders. Cool? You'll do that? So if you like the video, make sure that you smash the like button. Also jump into the comment section, talk to me, talk to others. Make sure that all of your doubts are cleared. Also, if you haven't subscribed to the channel, make sure that you subscribe to the channel and also hit the bell icon, right? And it goes without saying, I know you will do it, right? Share the video and share the channel with as many as friends and family as possible. So yeah, that is it from my side in today's class. As always, let's learn, let's trade, let's invest, and let's grow together. See you in the next class. Bye-bye.